In this video, I'll be going through Work Together problem 9-3 on journalizing installments, notes, receivable transactions. And the problem says the journals, I guess I should mention that this is on page 279 of the Century 21 Accounting Textbook, Advanced Edition 11. So I'll credit to Gilbertson and Lehman for that text in this problem. Okay. Using May of the current year, journalize these transactions. Refer to the amortization schedule when journalizing the May 9th transaction. Source documents are abbreviated as follows. A notes receivable is NR and a receipt is an R. So our first transaction is going to be on May 7th. And it tells us that they sold a car to Jill Shelton for $14,860 plus tax for $45.80 and receiving a $2305.80 down payment and accepting a 60-month 8% installment note receivable for the balance of $13,000. All right, lots of stuff going on in these. So, first thing we need to know is it is notes receivable that we're going to need to put in our general debit. And we wrote a note for $13,000. Okay. We know that they made a down payment, and that down payment was $2305.80. So that's going to go over here in our cash debit. Okay. And then the total sale was $14,860. And the sales tax on that was $445.80. Okay, so if we add these two together, we get $15,305.80. And if we add these two debits together, we get $15,305.80. So our journal entry works. So there's May the 7th. Oh, and we did need to put our document number in there. And it said it was note receivable 369. Now our next one. On the 9th, we have another notes receivable. And this time it is document number receipt 787. We received cash for Daniel Tony's May payment. So we're not writing the note right now. We're receiving the cash for his payment in May. And notes receivable is going to be reduced with a credit because he'll be paying down his note. $243.32. Oh, but we're going to have to split this, right? Because not all of it is paying down the note. There's a principal part and there's an interest part to each payment, right? So the whole payment is $243, but it's got to be split between interest and principal. And how are we going to do that? Well, here's his note, Daniel Tony, right? His monthly payment, $243.32. And it said that this is the May payment, right? So here should be our numbers for it. $167.72 should be your principal. You don't have to highlight that. I'm just doing it from showing you here today because this is the May payment. We're in May. So we have a credit to notes receivable of $167.72 to pay down the principal, and then we're going to have interest income, a credit of $75.60 for the total amount of the payment that he always gives, $243.32 every month. These two together better equal $243.32, and they do. So that works. Now, the next part of our problem says on December 31st, we have, let's just make this a little bigger, $93,467 of installment notes receivable is expected to be collected during the next fiscal period. So those need to become current, right? Because they're in the next period. Within the year, you consider things current. Record the reclassification entry using page 15 of the general journal. So now we'll just hop on over to our general journal, and the first entry, which we call reclassification entries, just another one of those headings that we get to use. At the end of the year, for financial statement purposes, so on December 31st, we're going to reclassify this as current portion of notes receivable. And then we'll need to have a credit to reduce our notes receivable. Both assets, they're just going to show up in different parts of our assets on the balance sheet. That's why it's a reclassification entry. And the amount on this was just the $93,467 that our book gave us. And there shouldn't really be a document number in a reclassification entry. All right, so we can leave that part blank. And now what's part 3 say? Using page 16 of a general journal, journalize the reversing entry for the reclassification entry. So, same thing, just got to reverse it out now on January 1st. Our financial statements are done now. So we're going to have reversing entries to put this back the way it was. So we'll have notes receivable as our debit, and our credit will be current portion of notes receivable, which will bring that back down to 0, okay? And our debits and credits are the same amounts. That date should probably be down there. And that would be it. So, we journalized our installment notes receivable transactions, and that is it for Work Together 9-3. So I will let you do the on your own.